Here is a short-term rental reality check on crashing property values for rental properties. Everybody, my name is John Howard, and in this short video today, I'm going to talk about that very subject and what exactly real estate investors should know or need to know about the reality of the fact that some of these Airbnb and short-term rentals, their property values are going down, and how much they're going to go down, right? So I'm going to kind of dive into some data here. So basically, recent short-term rental data points, a grim picture for, let's say, an average to below average property in the STR market. I say that because the reality is, everybody, premium STR, premium short-term rental properties are still doing very well, and those that know what they're doing are able to do it very well. When I say those that know what they're doing, I'm saying they've selected the appropriate location, and they've selected the appropriate property, and they've done all the right amenities, like, gone over the top with movie theaters and game rooms and, saunas inside the place, just over the top amenities, right? So this data that I'm going to talk about is really probably more applicable to, let's say, the average or below average kind of short-term rental, where you just kind of, host and post and easy money. Like, we think those days might be over. But anyway, so national occupancy rates have fallen to 48%. And this is below, what the level is that's needed to break even. Let's just say that level is about 55%, 50 to 55%, right? So the data isn't pretty. Nearly half of all short-term rental properties in the U.S. Are sitting empty, most likely because these are kind of average or worse, right? Average to below average, properties that they were trying to short-term rent. Major markets are experiencing occupancy drops. Austin's entry-level properties are at 24% occupancy. Property inventory for sale has surged 42% year over year in markets like Galveston, Texas. Median host income in key markets, their ranges are now $31,000 to $35,000, and that's annually, right? And that's before expenses. So obviously that's not pretty. So what's driving this correction? Well, so basically, as you may not know, or maybe you do know, but any way you cut it, you can probably guess it. The pandemic created an artificial boom, which was built on historically low interest rates. There's also travel restrictions, and there were some relative regulatory gaps. I mean, look, there was already regulations in place against short-term rentals in 2020, but at the end of the day, I mean, we've got a big country, and we've got a large population and tons of cities, and not everybody's caught up. Right. So, at that time in 2020, there were still lots of gaps. And, I've got, properties I do short, medium term rentals on. And it was like crazy. It was like, it was like Christmas every day, like a new great, inquiry all the time. It was almost, unmanageable. Anyway, today's reality reflects normalized market conditions where supply is outpacing demand and making it harder for an average property or host. In Galveston, another Galveston example, short-term rental registrations doubled from 2,300 to 4,900 properties since 2021, creating oversaturation. So what is the financial piece of some of this data so far, right? So let's factor in mortgage payments. Insurance is now up 23 to 26%. There are higher property taxes, and there's also higher costs for everything. There's higher costs for anything related to any maintenance when you go and do a turnover, higher costs for cleaning, and now an average turnover is costing basically $200 to $400, per turnover. I know that when I go, I actually usually spend more than that for my place, but my place is pretty big. It's like a 5-bedroom. And these revenue levels often fail to cover basic operating expenses. Properties purchased during the 2020 and 2021 boom are now vulnerable, carrying, because they're carrying mortgages based on inflated pandemic pricing. So what is the regulatory piece? All right, so cities nationwide are implementing stricter regulations. And, that's kind of like been in the news for I kind of want to say that's not really new news, right? I feel like it's been in the news for a while. But basically, New York New York's new rules caused a 40% decrease in demand, while San Diego plans to cut its 12,300 rentals nearly in half. Registration fees, hotel taxes, and zoning restrictions are making previously profitable properties unviable. So this may not be a temporary dip, and it could be a market normalization. The easy money times of short-term rental, post, host, and profit may be over. Success isn't nearly as easy now. It requires savvy revenue management, careful amenity additions and planning, extremely detailed financial projections, and understanding that now is a much different and still competitive environment than the pandemic's easy years, right? So for investors considering, short-term rentals and considering this kind of space, right? The data suggests caution when buying. If you're already in, it's time for a strategic review of your amenities, your furnishings, your pricing, and your revenue management. What are you seeing in your local markets? Everybody, I've been doing content lately on real estate. I mean, what's interesting is for me, again, my name is John Howard. I actually have owned and or operated 5 different short and medium-term furnished rentals in the last 2 decades. And during that time, I actually launched and operated 4 different businesses that all went up to 7 figures or more per year. And the reason I say that is because it is, doing short and medium-term rentals is very manageable to do alongside of other things. And certainly like in the case of being, a dynamic entrepreneur and a very busy career, you can do that alongside of that, right? And the fact is that, maybe everything that you're doing is going to work out great, but maybe it won't. And at the end of the day, I think at least for me, real estate has really panned out in terms of being a very valuable asset. Now, what I will say is I actually, feel very fortunate. I've got 2.875% 30-year fixed mortgages on my rental properties. My rental properties are here in Southern California. Southern California is susceptible to, some of it going down, but I've been able to maintain, a very consistent average monthly deposits, with my rentals, primarily because of mixing in medium-term rentals, or what you may know as midterm rentals, right? So going back like literally more than a decade, I've been able to average, about 10 or 12,000 to up to $37,000 per month. And that's really it's really just 3 properties, right? 2 of them I own myself, and then the other is like a partial interest. But, and that's been, very consistent for me. But basically, I don't know, I look at this as kind of an opportunity, because it's going to be an opportunity to acquire assets. Because when you get into real estate as an investor, you actually, and considering it's investment property, right? I'm not saying that buying a property is a bad investment, but I don't really talk about buying a property and living in it. It's more about having a certain amount of investment properties. You actually get 5 benefits, right? And the 5 benefits are, you get rental income and cash flow, you get appreciation, you get tax benefits, from depreciation and active income offset if you can qualify for material participation. You get the beauty of amortization, which is paying that loan down over time and then obviously increasing your equity. And then you get the ability to borrow against the equity, as time goes on. There's actually a 6th benefit, which some of you youngsters might not care about, but the fact is, especially as you kind of start to hit middle age, I'm middle age, and I see it as a huge benefit. The other benefit is, you when you get one of the properties paid off, you can move into it, because part of having a nice retirement is, having lower expenses, right? So that's a pretty huge benefit. So I'd say that is the 6th. But again, if you're, a youngster, you might not be as concerned with it. But even if you're in your 30s or something, 30 years of paying it down, you're going to be in your 60s. So it's certainly a very worthwhile consideration. But I don't know. What do you think? I think that, I'd like to hear about different, markets that are going on. I know that I've been keeping up with premium short-term rentals, and they still, people that know what they're doing and are savvy are doing very well. And I'm actually looking at doing, lots of different real estate deals. So anyway, if you like this content, everybody, what you could do is you could consider giving the video a like. You could also consider subscribing to the channel. Talk about all sorts of things regarding investing and actually real estate. I also do other things too, like, certainly like an active living enthusiast. So you'll see some kind of shorts and maybe not so much videos, but maybe shorts on that. And also, if you're interested in getting into real estate investing and you aren't yet, or maybe you are and don't really know what you're doing or something, but you'll see some links in the description. I got very basic a very basic product called the STR Launch Kit. You go ahead and click on that link and then you can go there. I also do very basic and also very inexpensive email coaching if you'd like to check that out. You can see that on the links in the description. Otherwise, you can also just kind of put a comment in the comments area. You could go to my Instagram and DM me, or you can go to even LinkedIn and DM me there and we can chat. I'll also put a link to actually my Calendly if you want to talk about any of this. Any of this investing, because I'm kind of always have, deals going on. I'm looking at flips. I'm also considering putting some of these deals that I work on, in like YouTube Shorts and some of the videos. And yeah, and in addition to kind of, helping, I shouldn't say helping, but being an expert. And then if people want to, speak with me as an expert, I'm also, considering bringing them into some of the deals that I'm working on. Anyway, would love to hear from you and have a great day.